has been the dominant player in China's emerging capital market. CICC has been a leader in virtually every major transaction in China, with awards too numerous to list. So we are honored today to have as our closing speaker, Chairman Levin Zhu.
I don't know, can I sit?
Sure. Stand or sit, either is okay.
Yeah. Thank you, Stephen. And I'm really honored to come here to participate in the dialogue. So I thought, this is not really about the speech. It's really about the dialogue and maybe discussions. I thought I will give some brief thought that I have and then open for discussion. And I think certainly I'm honored to come here to borrow this great venue of New York Stock Exchange, very historical. And certainly people sometimes talking about the G2 relations. I thought, yeah, probably US had the greatest economy and China has the greatest population. So that's 2G there. And certainly with this global backdrop that we see the world economy had been in a great expansion after 2002-03 period until 2007-08. With this great expansion comes with the great recession that we have seen in the last 2 years now. And we see there are some signs of recovery, but still I think the world economy is still in a stage of uncertainty. In my opinion, we are facing the new greatest adjustment that we may have to face. Even though that I know the U.S. economy seems to have shown very good, encouraging signs, but still don't underestimate the past expansion, almost a decade long. We had a great investment, probably arguably over-investment, and there's in my opinion, a great adjustment needed. And there is a lot of great debates about currency, about a lot of issues between China and US. I think one of the reasons was not really so much about the currency, it's really about the trade, about the economy, about the jobs, and the sort of markets. I think China in a bigger time scale, a longer time, if we look at the 30 years of framework, had undergone a great expansion and development. And, it has been very dynamic and sometimes very chaotic. And after all, now Chinese economy had, after great expansion is still about $5 trillion, which is only about 1/3 of the US GDP. And, given the US, the Chinese population is 4 times of US. So in relative sense, now China's economy is still in the early development stage. But of course, there's a lot of developments in many different perspectives, aspects are developing. For instance, Chinese capital markets. Now there's over 100 million registered investors, and the market cap is about 1.4 trillion US dollar. But in comparison, New York Stock Exchange alone is $13 trillion in market cap, about 10 times of the whole China's market cap. But it's developing, of course, very fast. And I think that's a good development along with the economic developments. Of course, that we have a lot of social issues that comes along with the economic development. The most obvious ones, for instance, the environment, the public services, social balances or imbalances. But we see in the future there's great opportunity still because after all, China's most dynamic growing economy with most of the people really willing to improve themselves and really willing to work very hard for that. And that's the fundamental growth impetus for Chinese economy. And as we see it, there is a great opportunities in further development in agriculture. After all, there's a lot of food issues in recent years coming up. And also, as the economy develops, people pays more attention to their health, and so the great potential for agricultural development. And there's also a great opportunity for healthcare development, because that's very needed for everybody's daily life. Certainly, there's a lot of talk about and the services industry's development. So far, I think there's some development in consumer-related activities, but most so-called service industry now is still mostly related with the manufacturing activities in China. For instance, transportation, the telecommunication, etc., is more kind of a business or manufacturing business process related. The true service sector need to develop it furthermore. And also there's, big talk about urbanization. I believe in a certain degree the importance of urbanization, but a lot of people take it, I think, to a wrong direction, as meaning constructions, buildings, that's we actually probably have done arguably too much. But the true urbanization, the reason for the city, the life of the city, is really not just by putting some big buildings together, then that becomes a city. There's a lot of issues to talk about, but that's really along with the social development of the Chinese society. So I think that we certainly still face a lot of issues about the great adjustment in China, especially the structural adjustments, and also the investments, probably over-investments. What is the efficiency of the investment? What is the effectiveness of the investment? What is the sustainability of the Chinese economy? How do we deal with the environmental issues, the emission issues? I think certainly there will be a lot of issues to discuss. But after all, we think, we always look at United States as the a great country, had early development, and there's a lot of experience that we can learn from them. And there's certainly a lot of economic beneficial benefit that we can have with each other and helping the development going along. So I'm really, this is my first time to participate in the discussion, the dialogue, and I'll be glad to have the opportunity to have discussions with a lot of experts here, both from China and from the U.S. side. Thank you.
If I may, I'll take the moderator's prerogative and start with the first question. On Friday, I read in the paper, there was a big headline that your former shareholder, Morgan Stanley, and J.P. Morgan were authorized to participate, a greater authorization to participate in the capital markets in China. And I read it, I said, wow, that's a big story. But then when you read further into the story, it just showed they could be a 33% shareholder in a Chinese company. Mm-hmm. One of the things that's made America's capital markets great is our openness to non-Americans. You have major underwriters today are Credit Suisse, UBS, Deutsche Bank, Credit Agricole. I mean, Japanese banks and others, and Chinese banks, I'm sure, will come in and play that role. When are as chairman of CICC, you must have a view as to what is the process going to be, and when are the Chinese authorities going to allow real foreign participation in this part of the capital markets?
Yeah, I think certainly we believe in, oh, by the way, I have to correct, I'm the president and CEO,
President
not
and
the
CEO.
chairman. But for the openness, we all believe in the long-term openness. But I think as far as I know in the past, this 30% openness is even more beyond the WTO agreement in a sort of international framework. And so it's still kind of a guiding principle, but I think in the long run it will be more open. But of course, every country, some country interested in this aspect, some are in other aspects. U.S. is very open in financial side, but not so open in other sides, other aspects. For instance, technology export.
You're not going to get agreement from me on that one.
That's all right. You know, we are here to disagree.
Any timetable?
No, I'm not the government, so I don't know the timetable. But
it will affect your business. In other words, if I were sitting at my former firm, Lehman Brothers or Carlyle, I would have a view of that because it would affect, the business plan that I developed. So we hear a lot of talk about Shanghai becoming a global financial center by 2020. I take that to mean, but maybe our Chinese colleagues don't, that means that global financial firms will be free to participate in Shanghai as if they were Chinese firms.
Yes, I think, Chinese capital markets is working on the so-called international board for other, foreign companies to be listed in China, in Shanghai stock market. I think, we know they're working on a lot of working level issues, like the accounting rules, like the home country rules, etc. So I think it's probably ready. But unfortunately, this is a time when there's a lot of economic uncertainties. So it sort of slowed it down, the process. We hope that it could be pushed forward in this new year.
Let's open the floor to questions right here.
Hello. Hi, my name is Zhang Ke. I came from Daiwa Capital. Stephen, a moment ago, and Mr. Zhu, you just mentioned the Japanese firm, Chinese firm, kind of thing. I have a question for Mr. Zhu. Recently, we know all the private equity, all the capital markets has a very strong passion for Chinese companies. However, we all see a lot of investment into China as well as the private equity firms. However, many of the Chinese companies who are listed here in the States, they're actually the P ratio, the market cap are kind of underpriced or undervalued, especially compared with the same company when listed back to somewhere, back to Asia, back to Shanghai. So what is your comment on that? Well, let's say, forget about a lot of firms, Chinese firms, they still can further improve their reporting, accounting, and also a lot of buyers, a lot of investors back in China. But just pure from because I know you are the best investment banker over there in China. So what is your comment on that? Thank you.
Yeah, I guess, the in stock equity market and stock market, you often see this, enthusiasm about some companies, some stocks, and especially it comes in from time to time. It's remember the 2001 the dot-com bubble, sort of before that bubble burst. You see this enthusiasm. we see a lot of waves of these. But I think that after all, this is probably what's interesting about the equity market. After all, this is a great, you know, these companies, creative companies are always the most dynamic part of the economy. And sometimes they may show us the real future, you know, and they probably will represent the real future. And people will bet on it, and people, that helps the capital move to where the most the new growth can be. But sometimes it could be wrong, you know, so it has to be left to the market to decide. So it's not, you know, unusual you see all these changes. I think they are, for the most part, is within the right range. You know, people have to speculate sometimes even, you know.
Fourth row center here.
I'm Stephen Sachs, and I happen to be a compliance officer for a NYSE member firm that's located in this building. And you know, I appreciate you coming here to give this presentation. And the thought I have, because I'm very familiar with your firm, and you are, without a question, the leader when it comes to the securities business, and you have a FINRA membership that's a firm, a subsidiary of yours, in Midtown Manhattan. And there are 4,700 FINRA members, and as Stephen Orleans mentioned, you know, some of the big firms here, the Credit Suisses and the Daiwas, they're all members of the New York Stock Exchange. And you know, from a leveraging point of view, I just think this building here, being on the floor of the NYSE, for your firm, I think would be a tremendous value proposition. So just want to leave that with you and see what your thoughts are.
Yeah, certainly. You know, after all, we are very small. You know, the company, when I joined it was only like 130 some people. Even now, after 12 years, we have become a company of about 2,000 people. For us, it's, you know, probably roughly, you know, 10, 15 times more, but after all, this is a very small company. You know, we hope that one day we may be justified and worthwhile to be listed here. That would be an honor. And in fact, we are still probably one of the smallest office in your FINRA, you know, 400 some companies, and we are very eager to learn. And actually, we are very afraid of making any mistakes, because the U.S. market is really, in a sense, a jungle. You know, it can kill you anytime. We don't want to make mistakes, but we're afraid of we're not perfect. You know, we probably will make some mistakes. Hopefully, not big enough to you know, to be suicidal.
Back left there.
Thank you. John Allen, Greater China Corporation. Thank you, President Zhu and President Orleans. My question is this: everybody focuses on the portfolio and investment activities of CICC, but over here is a giant elephant, the SAFE, the State Authority for Foreign Exchange. Could you tell us something about their investment activities, particularly international investment activities, through their directly and through their subsidiaries?
Yes, actually, you know, I'm not part of their organization. I think they're, in fact, I'm not so familiar with whatever they do. We only know probably they had some big investments managed under certain way, but we are more kind of a market-based commercial company trying to learn from the great experiences that our forerunners have accumulated, and hopefully, you know, helping the Chinese companies to develop in a more market-based economy fashion. And the past experience we had was the belief that this is a really great, useful, and we are still trying to practice that. In fact, the reason we opened our office here originally was for the service to the institutional investors who are interested in investing in Chinese or China-related equities. But then we quickly find out there are, many opportunities, and perspective is changing as Chinese economy develops, as China's income accumulates. There's start to have the need for China to diversify their investment, not only like a sort of strategic acquisition of oil assets that everybody talks about, but also in terms of real solid diversified financial investments into, probably greatest equities in the U.S. markets. Look at the market of equity in China last year, about down 10-20%. Well, the U.S. market is up 10% or more. So that the differential is already 20 percentage point at least in terms of investment. So as China develops, there's the so-called qualified domestic institutional investors. The QD scheme will bring capital from China out to outside. I hear that Professor Huang mentioned the ODI. That's one type. And maybe this type of security investments into U.S. markets and European markets is also another important aspect of Chinese investments. And I think that this is a necessary and probably helpful diversification for China. Nobody realized China since 95 already become net capital exporting country. It's very different from 1978 when China was really in need of the foreign capital for the economic reforms, for the economic developments. Thank you.
All right, time for one. There was someone in the back there. One very short question.
Sure, it'll be very short. I'm Yu Qingfeng from China Business News. I have a question related with President Hu's visit next week. So how do you think President Hu's visit next week, what's the impact to the Sino-US economic relationship, especially the currency issue? And what kind of common ground do you think President Hu and President Obama can look for? Thank you.
That's for a businessman. That's a too big question. Like I said, I have belief in the G2 relations. Looking at the 30 years time scale, we had often sometimes heated debates. There's always ups and downs, but more or less it's always in the right direction. I certainly will have the confidence. I think. Sometimes, especially as crisis time, it's easy to be driven, a lot of discussion will be driven by politically charged, debates. But otherwise, if we look at the longer term, there is a great potential and an opportunity for the two great countries and two great people to, work together and to benefit of both for the further development. Thank you.
Thank you. And President Zhu, thank you for giving so generously of your time and being here today. Professor Wu. Stay here.
So we are closing now. On behalf of the group from the Chinese side, I would like to express our appreciation for the help of New York Stock Exchange and also the National Committee on U.S.-China Relations for their help to make this happen. Today, we had covered a wide range of issues and also had a lot of interactions. I hope this kind of dialogue will help and improve the mutual understanding of US and China, will also be helpful for our economic futures of both US and China. Thank you.
On behalf of the committee, what I'd first like to do is say that all of our speakers arrived last night from China and did what I think was a fabulous, fabulous, fabulous job. 谢谢你们. I also want to thank the audience. There are only two possibilities here. One is this was unbelievably riveting, which I think is true. The other is this is the most polite audience I've ever seen. Since there was no movement, it's absolutely full, and there was no movement in the course of these discussions. So that's, I thank you. I thank the audience. You really were wonderful. I thank the Star Foundation, as I said at the beginning, and I also thank the Ford Foundation, because the Ford Foundation has provided support to CCER to engage in this dialogue, and that's important. I thank them. Lastly, this is what the National Committee is about. We try to educate Americans about China so that we have a more nuanced understanding. For those of you who are not involved with the National Committee, you can go on our website, ncuscr.org, and hear all about us. But again, thank you all for coming, and especially deep thanks to our Chinese colleagues for coming here from Beijing. We stayed to time. Look at that. 12:10, precisely.